Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm Monty. This is a 1-year daily candle chart of the volatility index for the CBOE. That's ticker symbol VIX. And I'm starting off with this chart because, as you can see, the VIX down here to the bottom right moved up to the role reversal resistance area, pulled back as we expected it to, and is now sitting very nicely within this trading channel. Now, the VIX is a contrarian indicator to the S&P, so we have to keep an eye on this as one of the most important leading indicators, because on Wednesday we had a bearish engulfing pattern right there, which would be bullish for the S&P. Remember, it's contrarian too. And there's still a little bit more room for the VIX to move down to test this support level. So what that means is we could see a little bit of a rally in the S&P next week as this support level is tested, and then I believe we will bounce off of that support level and go higher. Now, that could take a couple of weeks because we're dealing with the year-end, what we call Santa Claus rally. So the dropping of the VIX would support a year-end rally. And then once that rally has taken place and the VIX is bottomed out, that becomes a lot more bearish for the S&P. So with that said, let's go to the S&P so you can see just how that works out on the price charts. This is, again, the S&P with the lines drawn from last week, and you can see that we moved right up to this resistance area right here, and we have a spinning top. Now, again, we have to be careful with this one, because if the spinning top holds as a pivot point, again, we could see a little bit of a drop. So we're caught between two different signals, one with the VIX being a little bit more bullish and the S&P showing that doji and a spinning top right there, which could be a pivot point a little bit lower. So I would say protect all positions that you have within the general markets. Keep your stops pretty close, and then make sure you keep an eye on these support levels down here, because this is a critical support level. After that bullish engulfing pattern showed up and after we bounced, this becomes a next checkpoint for managing risk. So if the S&P starts dropping below 202.50, that becomes extremely bearish because we have gaps down below the market. Now let's take a look at the diamonds, which is the Dow Jones Industrial Average ETF, and as you can see, we've moved right up to the gap fill point that I highlighted last week. So that was our target right there, and we have a doji at a resistance point. So the Dow is looking a little bit more bearish than the S&P at this particular point, but remember, the Dow is a much narrower index because we have only 30 stocks within that index. So we could see a little bit of a drop in the Dow right there to retest the support level right around 172.5, which for the Dow would be 17,250. Now, for the Qs, that's ticker symbol QQQ, also known as the power shares, you'll see that we did bounce according to what I forecasted last week. This gap filled right here. This little tick mark here basically highlighted what I thought the market would do, and that would be bounce and go up on an angle like that, and it did. So we're at that resistance point once again for the Qs. That is looking as bearish as the diamonds, and we need to, again, keep our stops really close. If you have any stocks that are in the tech sector, keep the stops below support, protect your positions, because this is a very fickle market. You know, with what's going on in the world, with threats in New York and ISIS news everywhere, you know, it wouldn't take much to spook investors out of the market, and that's why we're being so protective right now with our investments. Now, finally, with the Russell 2000, which is a much broader index, you'll see that we did bounce off of that support level that I highlighted right here from last week. We did bounce bullish engulfing pattern on Monday. We had a continuation of that rally throughout the week. It bounced off, but again, now we're at a role reversal resistance that could really get in the way of any higher prices. So I would say ultimately, if I remove this line right here, I could draw a line higher at a resistance point up here. So I think that could be our next resistance. So watch that. We're still within a trading range, but this support level down here right around 1140 is the most critical support level, because if it breaks down there, we would be continuing with a lower trend for the Russell 2000. Now on Monday, which is November 23rd, we have an open house Q&A, which is your opportunity to plug into the Market Guys Live. If you go to marketguys.com, scroll down a bit, you'll see that there's a registration link right down here. Click on that and it'll bring you to the registration page. You fill it out, you reserve your seat, it's free, and by all means invite friends and family members to ask me questions. We'll analyze your stocks. We have a good action-packed hour. This happens once a month after Expiration Friday, and we're going to be ready for that from 8 to 9 p.m. on Monday, November 23rd. So this is AJ Monty with the Market Guys. Thanks for joining and have a great week. So long.
For almost 3 decades, AJ Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep-it-super-simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for the Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with 2 questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening, and our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do, because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these 2 questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have 2 services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out, or when a trade goes against you, when should I take my loss.
The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you've taken the first step in the right direction. We look forward to having you as our newest member.